Good morning, everyone, and welcome to Dive, a diversity including various ethnicities. How are you all doing this morning? I hope that you all have had a wonderful weekend. It is cold outside if you're in Georgia, and if you are not in Georgia, I hope you are warm. But we want to welcome you all to our segment today, and we're going to be talking about all lenders are not created the same. And there's a reason for that.
Ooh, I like that.
I want to welcome my co-host. Good morning, Jessica. How are you?
Good morning. Happy Monday.
Yes,
If
it
only
is.
you knew what was going on behind the scenes. It's coming. But I'm here and I'm ready to hear what my favorite lender has to say.
Absolutely. So good morning, Keisha. How are you? We are so happy to have you back with us again.
Well, thank you. I'm excited to be here. It's with you two esteemed, beautiful women. So thank you for allowing me to come back. I didn't scare you the first time.
Oh,
No,
absolutely not. Absolutely
no.
So
not.
I'm blessed to partake. So thank you.
Yes.
Well, we thank you. And so, everyone, just so you know, so Keisha Harris is a mortgage lender with Prosperity Home Mortgage here in Atlanta, in Georgia. She covers the state of Georgia. She is also a top producer in mortgage lending. So, listen, when you talk to Keisha Harris, you are on the right track. So, Keisha, we're going to jump right in today. We want to talk about, as we said, all lenders are not created the same. And the reason why we say that is because, of course, prosperity, we love prosperity, we support prosperity, and prosperity supports us. And so we just want to share with our listeners and those who are first-time buyers and maybe not first-time home buyers, because the process for buying a home changes every time, right? It's never
Absolutely.
going to be the same. So we just want to walk them through what they can expect and why and how important it is to have and choose a lender from the onset.
Absolutely. So yeah, it's a great topic because there are so many hundreds, thousands of lenders out there that you can talk to. And you might get different information from them. So let's talk about things to look for. The first thing is you have the right to choose. You don't have to stick with one lender if you're not comfortable, if it's not, if your goals are not lining up, not matching. So from the onset, you have the right to shop around. You have the right to talk to as many lenders as you like. And then you have the right to interview your lenders to make sure that your lender, prospective lender, lines up with your goals. You want to make sure that they understand what you're trying to accomplish in this process. And that their communication styles can match up with your communication styles. That's very important because along the process, there are, as Jessica said, there's a lot going on behind the scenes. And so if you're somebody that doesn't want to know all of that, and you just want to know what your responsibility is, you want to make sure that's communicated with your lender. If you're somebody that wants to know every single thing that goes on in the process, then you want to communicate that to your lender as well. So making sure that your lender is okay with the type of communication that you need and that can give you updates along the way. So that's the first thing that I would say is interview lenders to make sure that personalities are a good fit, that you connect, that you can engage with each other, that you trust the person that's handling the biggest transaction you'll ever make, right?
Absolutely.
That you have that sense of comfort with the loan officer. And you have a right to do that. As I said, you have the right to do that. So that's the first thing I say. Make sure that you line up with the lender from that perspective. The next thing that I would take a look at are product availability, because not all lenders can do all types of loans. If you're working with, say, a small broker shop, they may not even be approved to do FHA or have the ability to do FHA. And so they may just try to get you to use what they have. And I've seen that happen quite a bit over the years where buyers are being stuck into a product that may not have been the best for them, but that was the best that lender had for them. And so there's a difference because not everybody can do all types of loans. So when you're interviewing that loan officer, you know, some of your questions can be, what type of loans do you offer? Do you offer FHA, conventional, USDA? Can you do down payment assistance? You want to know, and if you are you familiar with it? Because you might need some of those programs, not just be stuck with, you know, some loans. And, you know, VA as well. Or if you have a unique situation, for example, if you're self-employed and you haven't filed your taxes for a while, or you wrote off a lot, you may even need a bank statement program. So you want to make sure that that lender can do that, because like I said, not all lenders can do all loans. And I think that's something that most consumers don't know or don't realize. You know, they think that we all do the same thing. And some of us do, but some of us don't. But the big difference is how we do it. We may be able to do all the same things in some cases, but it's how we do it. Do we have a team that supports us? Do we have designated underwriters? Do we have designated processors? What is the experience with doing these loans? Those are things that you can ask as well. What's the customer service level like for this company? Do they care about customer service? So things like that. Prosperity definitely cares about customer service. That's huge for Prosperity Home Mortgage. You may work with some other lenders that they just want the loan, and so your experience in the process may not be important to them, other than just getting the loan and closing the loan. So those are things to look out for. I mean,
so can I ask you a question?
Sure.
So you hit a lot of great points just in that brief moment. So if I'm going to play devil's advocate for a second. So if I am in the market to purchase a home, I have now decided that I'm going to find me a lender, because a lot of times I have met potential clients who come to me already pre-approved. So therefore, I didn't have the opportunity to refer them to a lender. They came to me already, you know, with a lender. So with that being said, for those individuals thinking that, first of all, we want them to go to an agent first, go to a realtor first, therefore they can refer you. Again, you still make your ultimate decision on who you want to work with, but you know, a lot of times the realtors have a team of people who they are comfortable working with because they know that they can get to the finish line with that lender. That's one. But in the event that you don't go that traditional route and you decide to go the route of finding a lender first, if they are not well versed in the types of loans, you know, they could potentially end up with one of those companies getting what the company has, you know, for them versus what could possibly be a better fit with Prosperity or any other mortgage lender, but because they don't know, you understand what I'm saying? They think they're in the best situation. So if someone is listening now and they're thinking of making the next step into home ownership, are there any resources that they can go to that would give them information so that they'll know or be better equipped when they start speaking to a lender? Like, listen, I read something in reference to a USDA loan. Do you offer that? Is there some way where they can do a little research prior to?
Yeah, for a first-time home buyer, I would definitely recommend taking a home buyer education class. There are HUD-approved housing counseling agencies all over the city of Atlanta. That's what they're charged to do, is to bring you unbiased information, and they are supported and backed by HUD. And so it is a course that is 6 to 8 hours. Usually it's done on Saturday, or you can even do it virtually or remotely. And so but all of this type of information is discussed. And so they have, during this session, they have professionals that are part of this process. So you'll get to hear from a loan officer, you'll get to hear from a real estate agent, you'll get to hear from a home inspector, an insurance agent. So they can help you kind of break down all the steps in the process and help you understand their role. And that's where you get to ask questions. But I think what I've seen happen out of these workshops are not only do you get to ask questions, but you hear other folks' questions. And so things that you may not
Mhm.
even known to think about, or you didn't even know was part of the process, you might hear someone else talk about that or ask the question. And that could be an aha moment for you. So yes, definitely HUD approved housing counseling agencies. And there are many, for example, the Urban League of Greater Atlanta. There's D&E, which I use quite a bit. There's let's see, Operation Hope. There are just
It's mortgages and mimosas.
mortgages and mimosas. Absolutely, that's our favorite, right? Absolutely, that's our
I
favorite.
love mortgages and
Yes,
mimosas.
me too.
Mortgages
Me
and
too.
mimosas. Yeah.
But yeah,
Yeah.
that's where you can ask those questions and hear dialogue and exchange before you start the
Mhm.
process or as you get into the process. And that makes your experience with the lender and your agent a little bit more robust, because now
Right.
you have, a understanding that you may not have had
Mhm.
before just by going through the educational process. So I highly recommend that for you.
I agree. Thank you. Thank you,
Sure.
Keisha. I think that would be extremely helpful for a lot of people, especially anyone that's like myself. We tend to want to research. This is a big project. This is a big investment. It's not something that you want to take lightly. So you want to do, your research. You want to, do your digging and gain as much knowledge prior to going into the situation.
Absolutely.
So I agree that all of those options are worth, checking into.
Mhm.
I have a
Absolutely.
question as well, Keisha, and I
Mhm.
think so. What you stated, Jessica, about the fact that so if I come to you pre-approved, and you just said I am able to choose my lender,
Mhm.
correct? But if
Correct.
I've been already pre-approved with a lender, do I have
Mhm.
the ability to actually go and shop another lender? And what does that mean? Like, are there any consequences with that? If
Mhm.
I've already gone to a lender, I have a pre-approval lender, but another lender, i.e. Prosperity, may have better products that will suffice me much better than what I'm working with currently, or
Right.
that lender, as you just said, doesn't fit what I'm looking for. What do I do with that? Like,
Mhm.
can I do that and not have any consequences with regards to my credit being checked again? Or,
Yeah, absolutely. So at any point, you have the right to shop around to see if that is in fact the best situation or scenario for you. So say that you've been pre-approved, you're now with Jessica or Iris, and they're saying, maybe you want to talk to somebody else or just get a feel, just have a conversation.
Or just a second opinion.
Yeah, just a second opinion. Absolutely. You go to the doctor, something's wrong with your hand. They're
Yeah.
telling you have surgery, and you're like, I don't want to have surgery. I'm
Self-surgery,
supposed to
right?
get some other options, right? I don't want to be down.
Mhm.
I don't want to pay
Right.
the money. I just don't want to go under the knife, right? So you have the right to get a second opinion. Same thing. This
Mhm.
is the biggest transaction
Right.
that you'll make, that you'll invest in, and you have the right to shop around. So even if you do have the pre-approval, and we get those all the time, and so
Mhm.
at Prosperity, especially if you're working with our esteemed agents and our partner relationships, we want to make sure holistically this is the best option for you. So we're going to look into that. And I'm the type of lender, and I'm sure the other lenders within Prosperity are the same way. I'm going to give you options. So this is what conventional looks like. This is what FHA looks like, because I don't want to box you in, because I wouldn't want to be
Mhm.
boxed in, right?
Right.
And so this is what you look like if you can go FHA. This is what you look like if you can go conventional. For example, I had somebody that was an affiliate realtor give me a call and say, hey, I have this borrower. He was with somebody else. Can you just take a second look? Talk to them and take a second look. I was like, sure. We talked. And so they wanted to go a little bit higher than what the previous lender did. And so what I did was say, take a look at both
Mhm.
options. So I looked at conventional, what the previous lender did. And even though, yes, they could go conventional, They could also go FHA and have more buying power because FHA allows you to purchase more within their guidelines, within their threshold. So I gave them both of your options. Okay, conventional, yes, this loans look good, looks like, and most sellers like this loan. But hey, if you want to get more house, you can go FHA, and here's this option. So just working with a lender to get a second opinion, and that will give you options. So then you decide what's best for you, not them, not the lender.
Right. And I
Great.
love that. Options is
That's okay.
always, the
Yes.
key. You don't want to ever feel like this is my only
Right.
choice.
Not
So
boxed in. I love that you said that.
exactly,
Yeah.
exactly. So
Yes.
we love it. So Keisha, what types of loans are being offered right now? I know things have changed. Things look a little different than they looked prior to the pandemic. Since the pandemic started, things have done some changes here. So what
Absolutely.
loan options do buyers have right now?
Well, we still have conventional. And so conventional, just to give you a high overview, conventional is a loan that conforms with Fannie Mae and Freddie Mac guidelines. Conventionals are great options. They typically have a little bit higher rate than FHA. They're a little bit harder to qualify for. They publish a 620 credit score. And just to be frank, most people that I see get approved for conventional loans are extremely high sixes. And when I say extremely high, I'm talking about 699 and 700. So it's a little bit harder loan to qualify for. However, it's an easier loan to process. So the documentation requirements are a lot less strenuous in comparison to some of the other loans. But those are great options. And so right now, Fannie Mae has a spotlight on certain segments of the communities to make sure homeownership is happening. And so there may be a chance where we can get you to couple with the Fannie Mae product. We have a homebuyer boost program that will get you $5,000 in a grant, which is a forgivable loan. I'm sorry, which is forgivable. And then we also offer a 1-year warranty. And see, this is helpful because now that helps you with negotiating power with your sellers, because now you're not asking them for a warranty because I already have one with my loan, right?
Yes.
And then when you close at the closing table, we will also refund you your appraisal. So you save money in closing costs. You get a $5,000 grant to assist you with down payment or closing costs, and you get a home warranty. And so that's with our Fannie Mae, relationship, and it's called Home Buyer Boost. So we have those types of programs going on. So conventional is always a great option.
Conventional requires how much down?
We can do as little as 3% down. So it would depend on each individual situation, but we can go as little as 3% down on conventional.
Okay, good to know.
Yep. And so that's an option. And then we also have FHA, which is a fan favorite.
Of course.
I love FHA because it's a little bit more forgiving. So it allows you to have credit blemishes. It allows you to stretch your budget a little bit more, and it allows more people to qualify for a home. Again, prosperity can go down to a 580 credit score with FHA. Now, what that means is you can have a seat at the table to apply. Doesn't mean that you're going to eat the buffet, right? That just means you got a 580. We're going to sit down and we're going to see if you can, apply for that. So, but it does depend on what your credit profile looks like. So just because you have the credit score, we need to take a deeper dive just to make sure that we can get the approval for you. But we can go down to a 580 credit score with FHA. And what I love about Prosperity is they don't want that to be a barrier toward home ownership, because you may have had a couple of blemishes on your credit before. So with our Advantage program, if you are a lower credit score on FHA or VA, and we can get you an approval, your rate is still better than market rate, because Prosperity cares about that segment and doesn't want to penalize that segment because they may have had some challenges in the past. So I love that about Prosperity. And that's one of the reasons why I've been here so long, because they absolutely care about what I care about, right?
Right.
So
it makes a difference.
absolutely it does. And then we have VA loans for our veterans,
Mhm.
100% financing, no mortgage insurance. It's a fantastic option, fantastic option. And we also can go down to a 580, and we have those same advantage features if we do have to take somebody down to a 580, that they get market interest rates as well. But we
Mhm.
also do USDA. We do jumbo loans, which jumbo means that it is higher than the loan limits of Fannie Mae and Freddie Mac, right? So that's
Mhm.
when you get into the higher purchases, and we're really good at that. We do a lot of business on the higher end, so we have great products for that as well.
Mhm.
So if you're entering that, 800,000, 900,000 or more homes, we have great
Mhm.
loan products that fit that as well. And then also for those self-employed borrowers, we
Mhm.
just got word that we're introducing a new product for bank statements that can definitely assist. If you're an investor, we have a great product that will allow you to put 20% down on an investment property, and you don't have to qualify with your own income. The rental history of that property is the income to pay for that property.
Oh,
So as
Oh.
long as you have a primary residence,
Mhm.
over 700 credit score, you have the money for the down payment, the 20%, we will use that rent. So what that means is, say you're buying a property and the fair market rent on that property is $2,500, but your mortgage on that property is going to be $2,000. We can use that $2,500 in rent to pay to qualify you to purchase the property.
Understood.
Yeah,
Mhm.
so you don't have to use your own income. So it's if you're wanting to dabble into that a little bit and buy a property and see how it works, but you don't
Mhm.
quite think you have the income to qualify for all of these things, that may be a great option for you as well. So we try to be holistic at Prosperity and try to meet the needs of all populations that we're trying to serve. And through our partner relationships with Berkshire Hathaway Home Services, it just is a good fit for both of our entities, and we love working together, and we love bringing you great products that can meet all of your needs. And if there's a
Just for
product out there,
clarity,
yes,
just for clarity,
yes, ma'am.
you will, for the investor option, the rental history income will qualify you. That still means you need to have good credit.
Yes, you have to have
Yeah.
over
Okay,
700 credit score.
Good.
let's make sure, we got to
Yes.
make sure we're clear for our listeners.
Yes, thank you. Yes, clear.
And
We
it's
still need some
20%.
20% down.
20% down, yes.
Mhm.
And is that the same for the jumbo?
So the jumbo it's varied. So we
It
have
varies.
several products. Yes, we have several products that can meet
Mhm.
different credit scores and different
Mhm.
down payment requirements and things like
Mhm.
that. But yes,
And how about the bank statement
bank
loan?
same thing. With all
Very.
of these programs,
Mhm.
because they are alternative, they're not
Mhm. They're not cookie cutter.
right, exactly.
Okay.
So we
Okay.
definitely want to come in with strong credit, and we definitely want
Right.
to come in with strong assets. So you
Mhm.
definitely want to save your money and make
Mhm.
sure that your credit is, looking pretty good. Yeah.
Mhm.
So I would say for these alternative
Okay.
programs, high 600s, 700s and higher.
Mhm. And
Okay.
so
Good to
let's
know.
just say I'm not a first-time home buyer.
Mhm.
Mhm.
I currently own a home and I want to consider getting into investing.
Sure.
And I'm saying this because I just had this question the other day.
Okay.
So this person already owns a home, has been in the home. They bought their home on a dream,
Mhm.
on the
Georgia Dream.
Georgia Dream.
Uh-huh.
And so they've been in their home going on 10 years.
Okay.
And so they're considering wanting to purchase investment property
Mhm.
or turning that home into investment property.
Mhm.
How do they go about that?
Well, I would look at their situation. I would talk to them about their goals, what they're wanting to accomplish.
Mhm.
I would talk to them. And so that's where that relationship is so important with your lender, that they
Right.
understand what you're wanting to accomplish and what you're wanting to do.
Mhm.
So when a person has a first home and they're thinking about becoming an investor or trying it out,
Mhm.
I always recommend, okay, since this is your first one, you're getting your feet wet. let's turn your current property into that investment property. And then
Mhm.
you buy a new primary. And the reason why I
Mhm.
try to recommend that first is
Mhm.
because the out-of-pocket or the upfront expenses are a lot less. So if you buy another primary residence, you're likely only going to have to put 5% down,
Okay.
right? And then the
Versus the
interest,
20.
right, versus the
Mhm.
20%
Mhm.
down.
Got it.
Your interest rate is much better because it's your primary resident and not an investment property, because the rates on investment properties are higher.
Mhm.
So
Right.
if you have that situation, I try to recommend that you do that, especially if you're getting your feet wet, because you don't want to use all your reserves. You still want to have assets left.
Correct.
You don't want to expend that, buying a property. Get that one, get a feel for what it's like to be a landlord, because this is not for the faint at heart.
No, it's not.
Especially, so a lot of people
Right.
don't realize, how being an investor, it can be work, it can be stressful. You can have
Yes.
people
Right.
calling you, oh
Because
my God,
you're not just collecting rent, baby.
right,
Oh my God.
absolutely. My car broke down, my kid is sick, I couldn't go to work, I don't have, and if you're like me, I'm like, oh, I'm so sorry. What can I do to help you?
You're just
And
pulling at
How
the
can I help
heartstrings,
you?
right?
yeah, that's just not good business, right? So you may want to test the water a little bit first before you go out and spend 20% down,
Right.
doing all that. So I highly recommend that if you're just starting out, you're dabbling, transition that first one. Because here's the thing, chances are you got a great interest rate on that first one.
Right.
You have great equity position on that first one.
Mhm.
Now, so that's the great house to start with, because you probably will collect more rent and have more profit on your
Mhm.
existing home than if you were to go buy one now as an
Interest.
investment property, because the interest rates are much higher than they were,
Yes.
back then. And so your
Mhm.
profitability margin is probably better on that existing home than you going out and buying a new one. And then, like I said, that's where you can get your experience in and make sure that you know that's a good fit for you to be a landlord. Because like I said, it's when they're calling you, I have a hole in my ceiling, my line broke and water's leaking everywhere, you're
Yes.
like, huh?
Yes. The baby turned on the tub and forgot to turn the water
There
off.
you
Oh,
Right.
wait, what?
Yeah.
yeah. So
Yeah.
it's your house still,
All
right?
of the nightmares that one can think of.
Right.
Absolutely. So yeah,
So
that's what I definitely recommend. And then,
Okay.
and then we can have a conversation from there, because everybody has their idea of how they want to get
Mhm.
to their goal. And so yeah, we would definitely have a
And
robust
every situation is different. So
absolutely.
what I'm hearing from you, Keisha, and I'm so glad that it's kind of being said. Iris, tell me if I'm wrong, that there is no one size fits all when it comes to
there is
lending.
not.
So
Absolutely.
therefore, do not compare your circumstances to that of your friend, your neighbor, your
Right.
coworker. Speak to your lender and find out what best fits you.
Absolutely.
So what may have worked for them may not work for you. What may work for you may not have worked for them. So I'm so glad that you're explaining that this is
Yes.
not a cookie cutter situation. And I
Absolutely.
really feel like a lot of people really think that way. Oh, I have to have this credit score. I have to make
Mhm.
this amount of money, not really knowing that it's a lot of behind the scenes things that are working in your favor that may,
Right.
turn it left or right, depending
Right.
on the circumstances. So I really do like that.
Yeah.
I'm going to hit you with the one big question that I know everybody is itching to get an answer for.
Okay.
What's happening with these interest rates? Keisha, tell us what's happening.
Absolutely.
Should I buy now? Should I wait?
Wait. Yes.
The spotlight is
So
on you, Keisha. Hit it.
okay, so I bet, and I will put my daughter's college tuition
Ooh,
on this.
okay.
Oh, wow. Okay. That's
Okay.
big.
That
That's
that
big.
many people
Mhm.
that were going to buy in 2020, 21, 2020,
Ooh.
2021, and 22 would say, I wish I didn't wait.
Mm.
I bet you I would put her college tuition on that to say
Yes.
those
Most
people
definitely.
would have said, I
Oh, most
wish I
definitely.
would have gotten in.
Yes.
What's that?
I wish I did not
would have gotten in.
procrastinate.
Yes, I
Yes.
wish I would have just gotten in. Right. So that's how I view home ownership. you got to get in. Like the lotto, you got to be in it to win it.
Minute.
You got to play to win. You're right.
You got to be
Yes.
in it to win it, right?
Okay.
So I'm biased because if your situation is ready, then you're ready. Because there may not, what we just had, we
Yes.
won't
May
see
never.
again.
We won't see that again.
We won't see
Not in our
those-
lifetime.
those-
We pray.
No, we won't see those interest rates with the prices the way
Yes.
they were.
Absolutely.
And the reason why I say that, because those prices are gone,
Yes.
right? Those prices are gone. So you want to get in. You want to get in because as it pertains, let me break this down separately. As it pertains to the rate, you can always refinance. So if it does happen,
You're prepared. You're ready.
you won't be losing out. Yeah. What
Yes.
you want to do is just make sure you pay your bills on time, make sure you pay your mortgage on time. And if it does come around again, then you just refinance. And now you take advantage of that low rate, but you're in, right? You have the house though. So
Yes.
you can get in. And if it does happen again, and you're like, I'm waiting for that, the house prices won't be the same.
Exactly.
So something is going to go up. Something is not going to line up.
Yes.
So that's why it's always a great time to get in. And don't be affected by the rate, or don't be scared about the rate. Because like I said, if we do have a time where rates drop, you can always take advantage of a refinance to get you back in line with what the market is doing. But you definitely want to get in, because while you're not in, others are still receiving appreciation from the property.
Yes.
Others have more control of their housing expense payment. While you're renting and you're unsure, if I'm renting a house, is my seller going to say, I have 60 days before I have to move because they've decided to sell? My seller is saying, my lease is up, I'm going to increase the rent by $600 because I can. And if you don't want to pay it, fine, you can go and I'll get somebody else to pay it.
Correct.
It's unstable. It's renting is just unstable in terms of the price that you're paying, whether you can either stay there, especially if you're renting a house, because sellers are volatile. Some of them want to take advantage of,
the opportunity.
cashing out. Yeah, absolutely. And so purchasing is always a great opportunity to make yourself stable, add stability for your family, create wealth for your family. You can use the equity line to start businesses. So if you do purchase and you have equity in your property, you can take advantage of that to start businesses, to pay for college tuition, so your child doesn't have to have student loans. I mean, they're just a plethora of ways that you could take advantage of being a homeowner and then add stability to yourself and to your family. So I definitely think it's always a great time. Yes, rates are all over the place. So as loan officers and real estate agents, we're going crazy because they're up, they're down, they're up, they're down, they're up, they're down. But one thing that is stable is what home ownership brings to an individual and their families, and that never changes.
I love that.
Keisha, I would venture to say too, and I think it's important, regardless of where you are in your life, and of course we have this picture in our mind. Buyers have a picture in their mind what they perceive or want their first home to look like. What would you say to a person, as you just said, about buying a home is it's building wealth, it's building legacy, right? And so if you cannot afford that $500,000 home, let's just say the home of your dream right now is the $500,000 home, but what am I trying to say? The benefits of owning a home, what would you suggest? Would you say buy a smaller home, start with a smaller home and do that as opposed, just like if you're waiting for this rate to become this great thing and you just don't buy at all?
So hindsight is 2020. And so this is a great question, and I'm glad you're asking it now, because I wish somebody would have asked me this or said this to me, to my 25-year-old self. I know I look only 26. Yes, that was a year
Absolutely.
ago.
Absolutely.
But if I had understood what I understood now as my
Mhm.
25-year-old self, I would be a
Mhm.
very rich woman right now. And I may not be on
Right.
a phone call with you, right? Because I'd be in the
Exactly.
Bahamas somewhere chilling.
On your yacht.
So, yeah. So, I mean, so this is a great question, because what I've
Right.
learned about real estate is, you know, just wait it out. If you hold on to it, real estate is a great investment. And so, yes, I would absolutely, Iris, to your point, is if I can't afford that $400,000, $500,000 house that I dream about, I would get a 175 or 200, right? I would start there, fix it up, spend, and invest in it. Then I would turn around and rent it or sell it.
Mhm.
And if I rent it, just like I said, I would rent that one, turn around, buy me another primary residence, not for so much more. Do the same thing, spend 2 years making this house better, improving it. Then I would turn around and rent that one. Then I'd go buy me another primary residence, and I would do the same thing. And then I could have a portfolio of real estate and have
Absolutely.
never used an investment loan, right? So that's an opportunity. Or you can spend time on that first $200,000 house, spend some time, fix it up, make it really nice, make it what you want it. Then you can turn around and sell it, and then take that money and then go buy your dream home, right? But if you're renting the whole time, you don't have that opportunity to where you have gained and appreciate equity. You don't have the tax write-off, you don't have those benefits. So absolutely, if you can't get that dream home now, that is a great way to get there, is by
Work toward it.
buy something, and then you have that position to help you be a stronger position for the next.
And I love how you just stated how you build that portfolio.
Mhm.
So you just told a person you could buy 3 different homes, 3 smaller homes, and get to the house and listen. And
It's
you just said
monopoly. Play monopoly.
play monopoly. Absolutely. You said 2 years. You didn't say 10 years,
10
20
years.
years. You said 2 years.
2.
Right? So that's great information.
Yes.
I hope you all
Yes. Mm-hmm.
wrote that down, because that was a golden nugget that Keisha just
And
gave
you
us.
never use 20%
Yes.
to buy an investment.
And you never, right. And she said you're never using investment money and taking out an investment loan. I love that. That was genius. Thank you.
That was
Appreciate that.
excellent information. Keisha, as always, you always come with the best nuggets
Yes, you
and
do.
gems. One thing that I want our listeners to take away from it is get in now and deal with the rest later. Again, you can always refinance, whatever down the line. If the rate is high, the prices of the house will go down. If the rates are low, the prices of the houses are going to go up.
Right.
It's never going to be like this. It's always a seesaw battle. So you just got to get in where you fit in, and make it the best, the best for you. But renting equals.
Oh, I think she froze. Are you guys both with me? Hello? Uh-oh.
Ladies, I appreciate
Hold
you.
on.
Love you so much.
Oh,
Thank
Iris
you.
came back.
Hey,
Yes,
Iris.
I was so nervous. I said, what just happened? I was like, what happened? Thank you, Keisha,
We
so
were
much.
telling everybody bye.
Mm-hmm. Thank you all so much. Keisha, you are always the best. We appreciate you.
Thank you so much, Iris and Jessica. I appreciate you. You ladies are the best. Thank you.
Thank you.